in Chicago. Oliver, when we look at the grains right now, weather's been a bit of a concern, right?
Well, yeah, I mean, typically this time of year, weather becomes a bigger player, especially making more and more headlines. I've talked with Scott many times over last month. You know, seasonally, this isn't a super great time of year to get super bullish on the grain markets. This is seasonally where we start to see the market top out. Now, with that said, I think today, this year could potentially be a little bit of a counter trend trade. I think, the last 2 weeks, we've seen the grains just got taken to the woodshed, for lack of better terms. And I think we're starting to see some of the potential risk-reward setup shift back to the upside after getting sold off so hard, especially ahead of a big quarterly report on Friday. Historically, that's a big market-moving report. We're going to get a look at updated acres as well as ending stocks. So potentially something to look forward to there for the bull camp. This afternoon, though, also going to be important. We've got crop progress after the close. I think the average analyst estimate is to see conditions decline 2 to 3% for corn and soybeans, and potentially that sparks a little bit of short covering from funds into that Friday report as well. Due to last week's holiday, Juneteenth, the commitment and traders report, which is typically released on Fridays, is pushed back a day. We'll get an updated look at that as well. And I mean, looking at the last week and a half, 2 weeks of trades, you got to imagine the funds are probably pretty darn close to that record net short position in corn that they had back in February.
Now, we also talk about outside forces hitting the markets, things like elections, right?
Absolutely, and that's kind of been something looming over the soybean trade in particular, I think, for the last several months. We know that the Chinese trade and the U.S. trade with China is going to be a big hot-button topic this year, and we've got an election debate on Thursday, and we expect those headlines with regards to trade in China to really pick up. And China, for the most part, has been really absent this year in terms of soybean purchases from the United States, and I really have a hard time believing that they're going to come back in a meaningful way ahead of an election with all that uncertainty. They're going to try to keep all the cards in their deck.
Especially with the U.S. really not a major player in soybean trade. Let's come back and we'll talk livestock markets, though, where the U.S. has been a big player in exports. With Blue Line Futures and Oliver, a lot of focus right now on that cattle on feed report, but do we also need to be watching cash trade for this week?
Yeah, absolutely. It's kind of a tug of war. We got the cattle on feed report Friday afternoon, and I think most analysts would say that it had a bearish tilt. Then we got a cash trade that was just red hot. I think the 5-area average price for live steers from the USDA was about 195, maybe 195 and change, which is a new high. And so you're seeing these forces kind of come together and battle each other. I would take the cattle on feed report with a little bit of a grain of salt. That data is about a month old. You've got the weekend to kind of digest and potentially even forget about it too. It's not like a grain report where you get it midday and see that reaction right away. I think the market has digested that information, moved along, and sees really the shorter term, near term tailwinds to this market, which is the cash trade and the good demand, which we've seen, the consumer really be resilient despite some economic signs of caution, I guess, so to speak, in recent data. That's going to be something to keep a close eye on. I think I'm starting to get a little bit more concerned towards the back half of the year, later in the year. So I think if you've got to get downside protection on, these are certainly great prices to consider that.
Yeah, absolutely. The need to just have a good marketing plan. Oliver, thanks for your time. Oliver Slope, Blue Line Futures in Chicago.